Hello and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is November 25th, 2025. I'm here with a morning analysis of Bitcoin. As always, please keep in mind that these analyses are for informational and educational purposes only, and if you use them to make decisions or take positions in the market, the responsibility for any profit or loss is entirely yours. In the first image, you can see that we've filtered trades from November 24th up to now for tomorrow's expiry in the raw database. A bullish outlook dominates the curve, which is currently being realized. According to this curve, profits are seen above around 94,000. Among buyers, put buyers are in control and are targeting 84,000. Among sellers, put sellers also dominate, with a floor at 82,400 and 700. Call sellers, however, have set a ceiling at 88,800 for the price, which has actually been observed as a ceiling. So we can expect a move toward the seller's floor, which is around 84,000. Let's move to the next image. Here, we've moved the slider forward. As you can see, since about 6 a.m. yesterday, the situation has become volatile, with the top of this fluctuation around 82,800 and the bottom at 82,400. The peak profit on this curve is at 82,610. So we see that the bullish outlook has gradually faded, turning into a more volatile view, and for this bullish move, a ceiling has been set at 82,800, which has pretty much been reached. In this slide, you can see that we've analyzed the trades in the process database. In the process data, since the start of yesterday, the possibility of movement in both directions has been seen, above 98,000 in profit and below 82,800 as well. As time has passed, it's now clear that the bullish outlook has actually materialized, meaning the call buyer's side has been realized. However, in this image, you can see that when we move the slider forward in the same database since 2 p.m. yesterday, the curve has taken a downward shape and is showing profits below 84,700, though we haven't yet made any significant move toward it. Our delta ends at around 80,600, marked by that yellow arrow where put selling and our floor have started, so we could see movement up to that point as well. In this image, you can see that we've shifted the expiry to November 28th, the end of the week. As is clear, the bullish outlook has strengthened even more compared to previous days, with targets above 90,000 and 96,000 being drawn from the curve. On the downside, the 83,000 floor is still a level where we could see a pullback before starting another bullish move. In this image, as always, we've overlaid the buyer and seller curves. Our target is above 97,000 and below 83,500, but both areas are currently in loss. Both zones have formed areas of disagreement. If we move the slider forward in the two boxes we've set up, the loss side gets a bit closer to profit, but both points of agreement are still in loss, which might indicate a somewhat volatile situation for us. As usual, we've mapped these points onto the indicator, and you can see that again, we might be seeing the zones opening up from each other, which means a bit more volatility. However, the upward movement of the ceiling is a bit stronger than the downward movement of the floor. The floor has stayed almost constant. The price is still moving almost tangent to the green band, and this suggests that we might see a move toward the red band. This possibility could actually happen. Let's move on to the strategies. In this slide, you can see that in the process data for tomorrow, we can find 420 Bitcoin long strangle strategies, which again shows the uncertainty among traders. Of course, this long strangle strategy is heavy. Actually, most of the entries are also from yesterday. Keep that in mind. That means the heaviest long strangle among our traders is a 300 Bitcoin strategy, which makes up a large part of this 420 Bitcoin strategy. And if you look closely, that 300 Bitcoin strategy itself, yesterday, actually around 5 in the morning, this is the interesting part. It was entered around 5 in the morning. Just like we saw on the previous slide, where the process trades from the start of the 24th were basically undecided, and after 2 p.m., the process trades turned bearish. So this long strangle lines up with that same time frame, meaning that gradually the uncertainty started to clear up a bit. From the process data we looked at before, in this slide we saw that the situation became clearer after 2 p.m., and these long strangles are from before that time. That means after the upward move happened to some extent, the expectation for a correction on the chart became clear. Now, let's move on to the next strategy, which we're going to discuss by rolling it over to the next expiration. At the end of the week of November 28th, we actually found that among trades of 50 Bitcoin and above, there are two bullish strategies, long risk reversals, whose combined value is 300 Bitcoin. We see that over 93% of them are in profit. The trader has also considered the possibility of a downward move to around 8.2 and 7.0, meaning the trader is operating within a volatility range between 8.2 and 7.0 up to 9.3 and 100, staying in the break-even zone. So price fluctuations within this zone do not impose any cost on the trader. Their strategy will oscillate around the break-even level. From 9.3 and 100 upwards, they start making a profit, and their risk is from 82 and 700 downwards. This means that up to about 82.7% by selling puts, they have also considered the possibility of a drop to that level. So we can expect a pullback before another upward move. Here, looking at the liquidity heat map, as you can see, the liquidity is for 48 hours. On the upside, there is liquidity in the 89,000 to 95,000 range, and given the bullish trend we are in, it is possible that in the coming hours we might see a liquidity hunt with stop losses being triggered to the upside. So that is not out of the question. But on the other hand, on the downside, from 84,000 to 87,000, there is also significant liquidity, which could again become a price target considering the overall situation. Based on the points we've reviewed, it seems that given the dominance of put buying and put selling trades in the recent transactions, we might see a move down to 84,000 in the near future. However, considering the liquidity levels, a wick to the upside and a liquidity hunt up to the 82 or even 90,000 level is not out of the question, and we should keep that possibility in mind as well. Also, looking at traders' sentiment for the end of the week, as you can see, it's clear that for several days now, a bullish outlook has been prevailing. In fact, from this bullish perspective, we might interpret that a pullback to 83 or 84,000 is possible, and that area could serve as a launch pad for the price to move toward higher levels, breaking through 91 to the upside, heading toward 94 and even higher levels. So here, the support is at 83.84 thousand. It's an important point. This support level is crucial for us. If it holds well, it could actually signal an upward move. But if this support around 83.84 is lost, then we'll head toward lower levels like 81,000. We'll have to see, in the possible corrective move that we might see in the coming hours, what kind of support we get from that 8.3, 8.4 area. Thanks for your attention. I hope this was helpful, and until the next afternoon analysis, goodbye.